All right, today's video, welcome. It's January 9th, 2025. And the question I got from my clients today are you going to file my business tax returns? So what I want to do is go to our handy little whiteboard here, and then we're going to draw this out. So give me just a second. Hopefully you guys like these videos and we're going to the drawing board. Me, myself, I'm a visual learner, so being able to write this out just helps me out a lot. So question is, let me get this up. Gotta make sure you guys can read it. So are you going to file my business tax returns? So by default, I really don't know what this question means when they're asking if I'm going to file it, because there's so many different ways to file a tax return. So we're actually going to write them out today and kind of talk about them just a little bit. So up here is typically a husband and a wife. We always do our little stick figures, right? And then as we start a business, usually if it's our first business, typically what we'll do is we'll just start out as a sole proprietor. They call that sole proprietorship. Um, and then if we're lucky, we filed a single member LLC because people said, hey, if you're a sole proprietorship, you probably ought to file an LLC. So at times we have single member LLCs. Then we get into multi-member LLC, which is this is one owner, this is one plus owners. And then we start to get into corporations. And so when someone says, are you going to file my business tax return? It kind of depends on which type of entity that you have. So in the business world, especially in the tax world, we like to call these entities. How are you structured? What's your entity setup? And so typically, without a business, we file a Form 1040. So if we're a sole proprietor, that means we have one owner. We're just an individual sole proprietor. And what we do is we file a Schedule C here. And what happens is this is just a form that goes inside our 1040. So our 1040 has the 1040, has our Schedule A, has our Schedule B, has a Schedule C. And so this form is just filed inside the 1040 tax return. Another way that that can be done is right here. If I have a single member LLC, and by default, I'm just treating it as a sole proprietorship, same thing. It can be a Schedule C just inside my individual income tax return. Now, when we start getting into multi-members and corporations, it can get a little bit different. So if we're a multi-member, then typically we'll say this is going to be a partnership return, and it's going to file what's called a Form 1065. And then this is going to produce a K1 that's going to go up here and go into your 1040 tax return. But this is an additional tax form that needs to be filed. And then when we get into corporations, we have two different types of corporations. And so we either have what's called, I call the flow through, which means that I'm going to file an S Corp return. And then it's an 1120-S. This is going to have a K1 as well. That K1 is going to come up here into our 1040 income tax return. Now, if we have a C Corp, this one will file an 1120, no dash S, no K1, and it's going to be taxed at this level, taxed at corporate level. At a flat right now, 21%. So if we made $100,000 of profit here, you're going to pay tax at 21%, 21,000. Plus, what's going to happen is any of the income that we have left over after taxes is typically going to be paid out via a 1099 dividend. And then that dividend is going to come up here and be taxed. And so this is where we get into double taxation on this side because we pay tax at the corporate level and then we pay it on the individual level on our dividends that we pay out. And so when this question is asked, we got to have more detail of how you set it up. So hopefully, I always recommend number one, that you work with an attorney. Sorry, attorneys, I spelled your name wrong. And then that attorney and you are going to work with your tax advisor as well. And so you guys right here are going to be a team. You're going to make sure that you're setting this up that's really good for the asset protection, but then also good for the tax savings as well. So this is pretty basic. It can get a little bit deeper than this, but this is just going to kind of show you the different levels. Hey, we have a sole prop. Hey, I'm a single member LLC. I'm a multi-member LLC. Because what can happen is a multi-member LLC can actually be a corporation as well. So it gets a little bit more detailed. Hey, I can be a single member LLC, tax as a C corp, or I can be a single member LLC, tax as an S corp as well. So that's why I recommend, hey, work with an attorney, get your asset protection set up for why you want to use that entity, then work with your tax advisor and the attorney to make sure that you're having it taxed the right way. Because all of these come with different taxes. So for example, a partnership, if it's a full-time business, you're going to pay self-employment tax on the full amount of your net earnings. Or you can use a tax advisor like myself. We're going to set up a strategy where we use an S corporation and we can be limited on the SE tax that we pay. And why does all this matter? Because if you remember, as an individual taxpayer, so you're over here, you're filing your 1040, we have different tax brackets. And so those tax brackets start to go up. More money you make, the more tax you pay. And so we want to do our best to minimize your taxes. So are you going to file my business tax return? Got to have more information. Plus, if you're any of these entities, S corporations, C corporations, multi-members, LLCs, anything that's outside of just being a sole proprietorship, a sole proprietorship can get away with just having a profit and loss statement. If you get to the other side where you're doing corporations, C corps, multi-member LLCs, S corps, then you're going to be required, if you work with us, have a profit and loss statement, then also a balance sheet. And there's actually three really nice forms when it comes to financials. You can also have a statement of cash flows. So what happens and why most business owners lose out on deductions, they try to do their own bookkeeping. They just keep a few receipts throughout the year because every time that you go out to eat or get gas, not every time you have your receipt or it fades out or one doesn't print out, you lose it. Someone else paid for the meals, you don't have the receipt. And so if you don't have a system in place, so people that I've known that are super successful, they say get a system in place, manage the system, and then everything will work out. But if we're not managing the system, so the way that we manage the system with all this is we use QuickBooks. And it's definitely a recommended one. It's a big name. I know it's has a little bit of cost to it, but just at the end of the year, there's a freak out because there's a company called Bench Accounting. They went out of business and everyone had their online data inside I think it's Benchmark Accounting. So what happens if that business goes out of business and all your data is in there and you can't get to it? Then you've lost all of your financial records that you need, number one, to complete a tax return, number two, to to be there in case you're ever audited. So have the system. The system is get QuickBooks. Keep track of your financial statements, your records. If you're audited, you want those receipts. QuickBooks will let you attach those receipts to transactions so they're saved inside, matched up, or get yourself a filing system. The receipts is super, super important. My mentor used to say that without a receipt, it's just a pretend deduction. So we want the actual deduction because our end goal as the tax advisor is to save taxes. The goal of the attorney is to protect your assets. All right. So hopefully you guys enjoy this video. Are you going to file my business tax return? You got to give your tax accountant more information. Hey, I'm a sole proprietorship. Or I went and I worked with an attorney. We set up as a single member LLC. Right now, it's just a disregarded entity. I'm going to file it on my 1040. Or worked with the attorney. We set up a partnership. We have me and my brother-in-law. We bought a piece of real estate. We're going to file that partnership return, on and on. So if you guys love these videos and my stick figures, then please do me a favor, hit that button, share it with a friend, and we'll catch you on the next video. Show us some love. Appreciate it.